Glenn, I have been watching a lot of TikTok lately,
Oh, God.
but I have some questions because there's a lot of information out there. So basically what I'm hearing is I should go be buying a G-Wagon and I can go write it all off. And basically it costs me nothing.
Such a simple question, but more of a complex answer. So the first question has to be is, do I need a G-Wagon? And
Well, everyone's going to say yes at this
correct.
point.
The answer is yes, probably. And so what we try to do is we have this little Plinko thing that you have to go through to come up to the right decision. And how that works is, am I going to drive the car for a long term or short term? Am I going to drive it a lot of miles or a little miles? Am I going to pay cash for it, get a loan? Am I a corporation or an LLC or a sole proprietor? And when you go through those questionnaires to determine that will determine if we're going to purchase it or lease it. If we purchase it, generally the rule is that you can write off basically 60% right off the top, plus a little bit more this year of the bonus depreciation to buy your vehicle and offset your business income. However, you don't want to take a write-off if it's going to throw you in the lowest tax bracket because you wasted the deduction, low taxes. So generally you want to buy it when you have a high tax year. That's when you want to buy a big vehicle, a special allowance vehicle. When you do that, you get to write off a big chunk of that. But if you turn around and trade it in or sell it the next year, you got to pay tax on all that depreciation. So if you buy a vehicle and you're going to take the bonus depreciation, you want to drive it for a long time. So the value.
What's a long time?
Long term, probably greater than 5 years. If you're going to sell it in 2 years, you get to you basically get the depreciation deduction today. And then when you sell the car or trade it in, you have to repay that money back to tax. So you want to keep it a long time or just keep it in your company forever. If you drive a lot of miles and it probably doesn't make sense to go drive a G-Wagon, even though they're very luxurious, but you would probably want to drive like a Prius because if you drive a lot of miles, the government gives you something like 60-some cents a mile to just drive your vehicle, and you have no depreciation recapture. You just get the write-off for the mileage. You drive 30,000 miles times 60-some cents a mile, that's your deduction. And you get that every year, and you can get rid of that car whenever you want. So you first got to figure out how much do I drive it, and the most important piece is how much is business use. Am I going to drive this thing 100% business use? Nobody really does that. Is it going to be like 90%? It has to be at least 50% business to be able to take the bonus depreciation. But let's say the car costs $100,000. That's probably a used G-Wagon. But anyway, say it's $100,000. You only use it 50% for business. That means you can only write off 50% of the vehicle. So $50,000 times your 30% bonus depreciation, you get a $15,000 deduction. If you drive the car for 75% for business, you would get $75,000 times 60%. So just because people say you can write something off doesn't mean you can, doesn't mean you should, and doesn't mean it's the right choice. So before you make the purchase, you have to, when you talk to your professional, your CPA advisor person, is like, which bucket does this go in to make sense financially? If you ultimately want to buy the vehicle and you can't even write it off, go buy the G-Wagon, have a good time, enjoy it. Life's short. But if you're trying to maximize your deduction, you have to answer those questions because that's one of the number one things you're going to get stung on in an audit.
Well, I think you threw out enough percentages and numbers that the average person is going to be calling because I have no idea.
If I had $1 for every client that called me on December 29th when they're at the dealership to buy a big heavy utility vehicle, it's awesome. And so you get to have that advice, but you want to be thinking about that now because you got to know the tax bracket you're in, your basis is, how much you're going to probably drive this thing, the long term, and we can project that out, and then you can feel empowered to make your decision to go buy your vehicle. You may not get the write-off, but you really want the vehicle, but you know the pros and cons of it.